What's up, millionaires? Welcome back to the channel. You guys have all requested, Godlove, can you do a step-by-step video from the start to the finish on how we can be able to take a trade, or on how we can be able to place a trade on either our private account or our pro firm account in 2024. And in line with that, since I'm here because of you guys, I just purchased a $50,000 pro firm account with the funded trader, and I'm going to be putting this money on a test. I'm going to be putting my money on the line to show you guys how you can place your first trade in 2024 from the start to the finish. If you're ready for us to get into the video, as always, make sure you smash that subscribe button on the video to subscribe to the channel so that you can always be updated when I come up with awesome content like this. So let's get into the video. What are we going to be doing today? Again, I'm going to be taking you guys step by step on how you analyze your trade, how you take your trade, and most importantly, how you manage your trade, how you manage your risks. Risk management is the most important, and that's what we're going to be tackling on this particular video. So I'm going to be showing you guys the tools you're going to use to calculate your lot size, the tools you're going to use to calculate the risk to reward you're going to be using on any trade, the tools you're going to be using to predefine your risks before you get into any trade. So as always, let me just quickly put my recording on, and then you guys can already see. I'm just going to quickly show you guys here. Let me just go on my email just to show you guys. You can see that's the account I just got from the funded trader, Royal Challenge. I always use the Royal Challenge most of the time, and that's a 50K challenge account. That's $50,000. I just lock in the same account on MT5, and on MT5 you can already see the account right here. Let me just go here. You can see that's the account right there, Ting Market, because you know with Ting Market or with the funded trader, you can choose between Ting Market, Purple Trading, or 8cap. So most of the time I either use 8cap or Ting Market. They're all good, they're all perfect. So now I have my MT5, I have my funded trader account, and I'm ready to go. So once you already purchase your funded trader or your trading account, either from any pro firm, it can be from Lionheart funding program, it can be from the funded trader. Unfortunately, I can't trade with my own pro firm. At the same time, I have the goal to still go up to about $10 million in funding in 2024. So I'm still going to be using, there are many good pro firms out there which I'm still going to be using. So today I'm going to be using the funded trader. So everything is locked in. And since this is a new profile, I just have a couple of trades we're going to be taking. We're going to take a trade on CADJPY. We're going to take a trade on gold. Those are just some few signals or some few trades that I've seen that are worth taking. And remember, this is mainly just so you guys can understand the whole process. First step on the whole process is to lock in your accounts, make sure everything is set. I already have my account locked in on my phone, and now I just need to choose the currency pairs I'm going to be trading. And anytime I come into the market, I don't already predefine and have at the back of my mind that I'm going to be trading this currency pair, I'm going to be trading this. No, I trade what I see, not what I want the market to show me. That's very important. You trade what you see, not what you want the market to show you. In Forex, we have more than 28 currency pairs. So when I come into the market and analyze and I see that, okay, this currency pair is giving me an opportunity, I take it without planning for days upon days to say, okay, this is what I'm going to be trading. So I go with the flow. And according to that, we have a trade on CADJPY, which we're going to be taking, and we have another trade on gold, which we're still going to be taking. The profile is still very new. Like I said, this is Ting Market, and let's go on the first trade. And bear in mind, our account size is what? $50,000. Let's go on Control T so that you guys can see that's $50,000. And if I can show you guys up here, that's Ting Market. Let me just see if I can enlarge this a little bit. You guys are going to be able to see. Let me just zoom this in so that you guys can see Ting Market. Good. So you can see up here it says Ting Market, because that's Ting Market, the funded trader. All right, and that is $50,000. So we're going to be starting. We don't have any trade. The history on this account is still empty. So the first trade we're going to be taking again is what? Is the trade on CADJPY. So we're going to be doing our analysis, and what you have to have at the back of your mind is your account balance. We have $50,000 account balance. And then you also have to determine how many percent of your account do you want to risk per trade. I always advise at the challenge phases, you can risk 1 to 2% of your account when you are still on the challenge phases. Then when you go live, you never risk more than 1% of your account once you go live. But even on this particular trade, or 90% of the time, I always risk like 1% on each trade, right? So we're going to be doing the same thing. We're going to be risking 1% of our account on this particular trade. So for you to be able to know the exact lot size you need to be risking, you need to first of all analyze the market to know where reasonably you can place your stop loss, so that you'll be able to know the stop loss distance in terms of pips before you can use that to the software, which I'm going to be showing you guys, to calculate the lot size you can use, so that you can only risk 1% of your account if the trade doesn't go your way. All right, so that's that. First step, we've already locked in. Second step, we've known our account metrics, the account size, the account balance, how many percentage we're going to be risking per trade, and the risk to reward. The risk to reward we're going to be using on this trade is 1:2. So you can see we are already predefining all our risks. We're already planning. That is our trading plan. So all of these steps are in my trading plan, and I need to tick all these boxes before I can place the trade, you see. So after going through all these steps, the next one now is just to analyze. And to analyze, let's just take a simple strategy. Strategy is not even the most important when it comes to trading. It's structure, approach, and psychology, which is the most important, right? So strategy is just, if you're going for war, obviously you need a strategy, you need a plan. So our strategy here, we're just going to be using the simple moving average strategy I taught you guys, plus trend trading. So now you can see it becomes a point in trading where you can actually use two strategies to look for a point of confluence. So you can be combining the Fibonacci strategy with trend trading, Fibonacci strategy with a moving average with trend trading, like I'm doing it. So you can see these are two different strategies that have combined to be able to look for a solid signal or look for a point of confluence. And first point, just looking at the chart here, you can see we are in a clear uptrend. Even if you drop this on a 4-hour time frame, can you guys see this? We're in a very clear uptrend. I'm just going to delete this so that you guys can see my chart very, very clear, right? Then I'm just going to push this in a little bit, then push the chart like this. Perfect. So can you guys see this trend? Can you guys see how awesome the trend looks on the 4-hour time frame? But we're going to be taking the trade on the 1-hour time frame. Even on the 4-hour time frame, the uptrend is already confirmed. The moving average cross, we already have it right here. Meaning even the 4-hour time frame, we are already confirming it is an uptrend. 1-hour time frame, we are confirming it is an uptrend, and we're going to be taking our trade on the 1-hour time frame. Look, on the 1-hour time frame, the process now becomes very, very clear on what we can do. Remember, the strategy is simple. Anytime we have a moving average crossing where the fast moving average cross over the slow moving average from below, that's a buy signal, right? And then when you re-enter again, when the market push right down to the slow moving average. In this case, our slow moving average here is the 23 period exponential moving average. I did a detailed video explaining this strategy. You can just check the link above to watch that particular strategy. So you can see the market already pushed back to our slow moving average. The market must push back to your slow moving average or between your slow and your fast moving average. So you can see the market got back here and we're just waiting for the first bullish signal. The first bullish signal was an indecisive candle. You know this kind of candle in the market they call an indecisive candle, right? So long as I've already confirmed that this candle is blue, is bullish, I'm going to be entering. I don't have time to be waiting. I use candlesticks strictly for my confirmations. I don't sit there and I'm trying to look for the Maribuzu, the hanging two, the shooting star. No, we're just waiting for the market to push back to our slow moving average, and then we can look for the first bullish signal. So we got the first bullish signal here and we're going to be buying as we speak. So if we're buying here, realistically we can put our stop loss on maybe 30 pips, because you can see the market push right down to this particular point, right? So the market can still be able to clear this area without you saying the trend has changed. So let's realistically put our stop loss on 30 pips. And if you are putting your stop loss on 30 pips, since you are going for a risk to reward of 1:2, you already know your take profit is going to be going on 60 pips. As easy as that. Now we already know, first step, this is an uptrend. Second step, we already know that the market has pushed back to our slow moving average and give us a buy signal. Third step, we already know that, okay, reasonably we can place our stop loss on 30 pips. So now we have all those points, and the main question now is, what lot size can you use on this particular trade so that you can only risk 1% of your account on one trade? All right, what lot size can you use? Nobody knows, even I myself, I can't know unless I use a tool to calculate that. And that tool we're going to be using is Forex calculator, all right? So I'm not sponsored by this app. This is just an app which I use on a daily basis, and I find out that it's very, 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 very crucial. And this app, just go on your Play Store or your App Store and check this particular app that has this particular logo, all right? So on this particular app, it's easy. Just come here, you click on where it says position size. What we're going to be calculating is position size. And before we go on position size, what I use most of the time I do is just to go, you fill in like the lot size or the margin. Most of the margin, if I'm this with the funded trader, the account I'm using, they give me the leverage of 1:200. So I choose the leverage. If it's 1:500, choose the leverage. And then I go to position size. I click here. The currency pair we're going to be trading is CADJPY. So I go here and I just check on CADJPY. Click on symbol, check on CADJPY. Account size is $50,000. And the risk per trade, I'm going to be risking 1%. So immediately I put 1% here, you can see it already rise here $500, meaning I'm going to be risking $500 on each trade. You see, I'm going to be risking $500 on each trade. Meaning in a day, if I take 5 trades and they don't go my way, I'll know, okay, I'm already down with 5% on this day. Or if I take these 5 trades and they all go my way, I'll already know I'm already up 10% on one day. So good. Lot size or stop loss in terms of pips. Remember, our goal here is to calculate the lot size we can use so that we can only risk 1% of our account if the market doesn't go our way or if the trade doesn't go our way. Stop loss in terms of pips, we put 30 pips and then we just click on calculate. All right. If we click on calculate, you can see it's loading. The figure you read is where it says standard lot. So the lot size we're going to be using here is 2.46. If you want to round it up, it's 2.5. Easy as that. So now you already know the lot size, standard lot, 2.5 lot size. So you come here, you just click here, and lot size, what do you put here? You put 2.5. All right, 2.5 lot size. And what was our decision again? Buy. As simple as that. We click on buy and it's asking us to activate one-click trading, confirm, and we just go here again, click on buy. You can hear that sound. We've already put a trigger. Don't suffer from the fear of taking a trade. Once you've already analyzed your trade, everything, all the dots are already ticked, and it's time for you to pull the trigger. You need to pull the trigger. Now we just need to modify this trade, and to modify the trade is simple. We need to go on our terminal, and we're already up with almost about plus $10. But we'll go here, we'll go to where it says modify. Let's just go to modify, and we need to put our stop loss and take profit. Stop loss, let's put stop loss. Remember, 30 pips is the same as 300 points. It's always in terms of points here, right? So 300 points, and our take profit is what? 600 points or 60 pips, all right? Because a pip is 1/10 of a point. So after that, you click on boom, voila, we already confirmed this is our stop loss. You can see the line. That's our stop loss. That's our take profit. We've already predefined our risks. I can walk away from my computer already. Let me show you guys. And remember, I'm teaching you guys how to trade in peace. At this point in time, you can see that's my $50,000 profit account. I need to make 8% to pass phase 1 and 5% to pass phase 2. This is 1% already in one trade. 1% risk already in one trade. Meaning at this point in time, I'm already telling myself that, okay, if this trade doesn't go my way, then I'm comfortable to risk 1%. If this trade doesn't go my way, then I'm comfortable to lose 1% today. So I can walk away, I can close this chart and I start analyzing another one. That's trading in peace. Meaning if you come and you're risking 1% per trade and that day you've already taken 4 trades, just tell yourself that if the market doesn't go my way, or if all these trades doesn't go my way, then it means I'm already down with 4% today. And if you can't swallow that, or if you can't take that, then it means you shouldn't take up to 4 trades for that day. That's how you trade in peace. Or if you want to take up to 8% or up to 8 trades in one day, or if you want to risk up to 8% of your account, then you should ask yourself, if I'm risking 2% per trade, and this day I'm planning to take 4 trades. It means if these 4 trades don't go my way, I'll already be down by 8% on my account. Can I handle that? Can I swallow that? If the answer is no, then you need to reduce your risk. The answer always have to be yes. Today, I can take up to 5 trades. I can take up to 10 trades because I'm already telling myself that, okay, if I take up to 4 trades and they are all losers, it means I'm already down by 4% of my account. But most prop firm will give me a 5% daily drawdown, meaning I'll be able to end there. I'll be able to end there because I'll say, okay, this wasn't a good day. I'll come back and trade another day. It's better you preserve your capital to come back to trade for another day than to blow it on one trade. That is very, very important. So the answer always have to be yes. You can see here, we already analyzed on this particular trade, and we're going to be risking 1%, meaning if the trade goes our way, we'll make 2%, and if it doesn't go our way, we'll comfortably lose 1%. This is not something that will cause us to jump up from a story building. This is not something that will cause us to have suicidal thoughts because we can handle that. That is within our risk tolerance. That is our risk appetite. So you always take your trade according to your risk tolerance. No matter what any other person is saying, not even me, I shouldn't be the one to tell you how to cut your risks. Cut your risks according to your size, all right? It should always be something you're comfortable to lose. Good. So that is that. You can see the trade. We are fluctuating. We're almost on already $50 already. $50 on 5,000 on $50,000 is like 0.01 or 0.1%. But our goal on this trade is to see if we can hit 2%. And then let's go to gold. Let's go and take another trade on gold. On gold, our analysis was just simple. We had 2 confluences on gold. You can see the market is already dropping. I'm almost late already. On the 4 hour, you can see the market is dropping. And I was just waiting for the market to get to this particular upper trend line. 1 hour time frame. Let's go to 1 hour time frame. You can see we had another confluence. The market had a turn here, here, and I was just waiting. So you can see I was waiting for this confluence and waiting for this. I was waiting for this confluence on the 1 hour time frame, waiting for this confluence on the 4 hour time frame, and it already happened. So we are almost late. The market has already gone in our favor for almost about 17 pips, but I'm still going to be jumping in. All right, I'm going to be jumping into this trade. My stop loss is going to be on 40 pips, and I will be going for a risk to reward of 1:2. So I'm going to be going for 80 pips. I'm going to be risking 40 pips. So like I said, I'm going to be selling on gold. But now the same thing happens. What lot size are we going to be using? Remember, we need to calculate for gold. So we come here, we put gold is going to be under metals. Let's go to under commodities, sorry. And then gold is SAUSD. We're going to be risking 1%, and the stop loss is on 40 pips. All right. There's something I'm going to explain once we see this. Good. So standard lot is showing us 12.5, but you need to divide this by 10 if you are trading with gold. So the lot size we're going to be using here is 1.25 or 1.3. All right. So we come here, we put 1.3. Good. So, and then remember, what is our decision again? We're going to be selling. Boom. Can you hear that? Then we just quickly click on it. Where is gold? Gold is right there. We go to modify, and then we go to where it says stop loss is 40 pips, which is the same as 400 points. Take profit is 80 pips, which is the same as 800 points. And we click on OK. Voila, we're done. We already have our trade on CADJPY. We already have our trade on gold. Meaning, how many percent of our account is at the risk already? 2%. So now I can be able to cheat to say, okay, let's wait to see what's going to happen. Let's wait for all these trades to mature before we can come back and take more trade. If you are comfortable on adding more trade, go to different currency pairs and continue analyzing, see other trades, but always be able to keep track of the risks you have. I have 2% of my account already at risk, and you can see both trades are in deep profit. We are already up of almost about $100 on both trades, both gold and CADJPY. So that is how you place a trade on either your private account or your prop firm account in 2024 the right way. You guys can see how on the whole process from the start to finish, how I've been at peace with myself trading, how I've been tranquil, how I've been at peace with all the setups and all the trades I've taken without me questioning myself, questioning my setup. So the first thing is for you to be able to have a system you trust in, to be able to have a strategy you trust in, and an approach you trust in. With those 3 things, I can be able to know that, okay, no matter what happened, I know that today if I'm taking 4 trades and I'm risking 1% on each trade, if those trades don't go my way, I'm comfortable to let that 4% go. And if they all go my way, if these trades all go my way, I'll be making almost about 2% of my account on each trade. And now I have 2 trades, it means I'll make 4% on my account on 1 trade. With 4%, I just need 4% more to pass phase 1. And on phase 2, if I can pass phase 1, there's nothing that's going to stop me from passing phase 2. Now I'm funded. I'm just looking for 10% on the funded account. 10% on $50,000 account is $5,000, and I'll request a payout. If I can make $5,000 on something which a $50,000 profit account is about $300. So if I can spend $300 and at the end of the day I make $5,000, that's a huge return on investment. That's how you should always think. So thank you guys so much for watching to this particular point in time. I'm going to keep you guys posted on this particular trade on my Instagram. Hopefully we hit both take profit on each trade so that we can make 4% on this account. And even as the account progresses from funded to from phase 1, phase 2 to funded, and even getting a payout on this $50,000 profit account, I'll keep you guys posted. Make sure you check the link below to use my recommended prop firm, which will allow you to scale up to $2 million or up to $3 million and max allocation of $600,000. So check the link on the video description to use my recommended prop firm. Check out this video, which was one of the videos. I also showed a step-by-step strategy which you can use on your funded account. Check out this playlist, which is a playlist of videos that will get you kick-started in 2024. Click here to subscribe to the channel if you haven't done so, and I'll see you guys on these other videos. Peace.